Let's talk about Adobe earnings right now. The shares are under pressure after reported earnings moments ago. The shares are down almost 6%. The results for last quarter did beat on the top and bottom line, but the company's guidance is falling short of what analysts had predicted here. The company saying adjusted earnings per share for 2024 will be $17.60 to $18. The estimate was $18, so there's room for them to miss estimates here. It looks like revenue overall, the forecast is below what analysts had predicted. And in particular, whether you're looking at their digital media revenue, which is the bigger part of their business, or digital experience revenue, both of those leave room to miss estimates. One more thing I just want to mention here that I'm still sort of trying to figure out. The company said it got a communication from the Federal Trade Commission in November about its subscriptions. It's unclear to me exactly what that entails here, but the company says at some point that there could be a monetary penalty related to that. So let's piece through all of this and bring in Brent Thill, senior analyst at Jefferies. Brent, it's good to see you. Why don't you first just give us your first blush reaction here to these Adobe numbers, and in particular that forecast?
Yeah, thanks for having me. The quarter was fine. The guide was below an ARR, total revenue and earnings. So all three metrics were below the street. And, this is pretty classic. I mean, Adobe's guiding out a whole year. I mean, think about Google. They don't even give you one quarter of guidance. So, the CFO has been pretty conservative. They've been in a beat and raise cadence. Anytime, you give a full year guide, you're going to be probably pretty conservative, and the macro environment's still uncertain. So they guided to around 10% growth at the midpoint. The street wanted 12. And I think there's been obviously a huge run up in the stock. So at 350, 400, everyone thought the creative business was dead and that they didn't have any AI, and that the acquisition that they're pending on now was going to be a disaster. And I think that was all wrong. And so there was not a lot of debate going into this print. Everyone was on the offense and believed that they could walk on water. And clearly the guide's below, and that to us is a great place to start. It's not a signal that the business is under duress. It's just you're guiding out for a full year, and we think ultimately Dan Durden's a great CFO, and he's done a nice job providing guidance that he can hit.
And Brent, listen, it's Josh. It's great to see you as always. And you hinted at this. I mean, the stock was a rocket ship headed this year. I mean, it's up 85% into the print. But you have a buy, Brent. You got a 660 target, I think. What are the catalysts ahead for Adobe that you would see that, are there dates, products coming, solutions that, investors should know about?
Yeah, I mean, we've said that in AI, they're ahead of everyone else. It's Adobe and Microsoft at the front of the line. With Firefly, they're crushing it. It is truly a product that is changing creatives' lives. And in the last 20 years of Adobe's history, creatives have not seen this level of innovation. So Firefly came out, this fall. Their AI products are invading every one of their creative products, from Illustrator to Photoshop, across the board. So we think that's going to fuel a broader adoption cycle and pricing for Adobe. So that is started. It will only continue into next year. And we continue to believe it'll filter into video, into audio. We think they've done a really nice job hiring some great professionals. One of the guys out of Stanford that taught AI on audio, they just hired. And so, this is going to invade every one of their product lines and help pricing, help user productivity. And remember, again, Adobe really doesn't have a direct high-end competitor. They have Canva at the low end, but at the high end, they don't really have anyone. So I think ultimately this is really just a result of conservative guide, and that's what you would do if you were the CFO of Adobe. You're not going to give an aggressive guide, and that's kind of really what everyone seems to be concerned about.
Well, it's so interesting, Brent. I feel like almost Nvidia didn't do its competitors a favor with some of its huge numbers that it's been, not competitors, anything related to AI, right? When they came out with some of the huge numbers and huge projections that they've come out with, did that sort of condition the market to expect that anybody who's touching this area is just going to blow things away every time?
Yeah, I mean, it's a good point. I think we've all there's been such a big run, and there was so much skepticism on Adobe, 350, 400, and there's just been no pushback. I've been seeing clients in New York the last couple of days, and no one really has had anything negative to say about Adobe. And that's when you probably start to say, hey, maybe everyone's getting too comfortable. And so again, I think if you look at Adobe, from $30 when Steve Jobs was bashing Flash to now 600. I mean, this company has been incredibly resilient, is an incredible business, is running double-digit growth with a 45% operating margin. There's no software company like this. I mean, Salesforce.com is running 10% growth at a margin structure, at 30% margins. These guys are at mid-40s. So, there's nothing wrong with the business. There's nothing wrong with what they're doing. It's just the conservative nature of the revenue stream. And I think there's a ton of catalysts that they'll show for revenue upside. Once they get Figma closed, again, it's inorganic, but they'll drive revenue growth back to the mid-teens just with Figma, and then a natural beat and raise cadence. You're talking another 2 or 3 points from where they guided at 10. So now you're suddenly, looking at a company next year that could probably grow or inorganically and organically mid to high teens with a 40% margin. There's nothing like it in software.
Brent, I got to get you out of here on this. We're wrapping up 2023. We're heading into 2024. You cover a lot of big names investors care about, not just Adobe, Alphabet, Meta, Microsoft. Of those, Brent, do you have a top pick for 2024?
In software, it's Microsoft because of the product upgrade cycle and AI. And I think Nadella and Amy Hood have done the best job of any software team managing the level of innovation and pace of adoption. They're in a great position. So Microsoft's are still one of our favorite stories, has been for a long time, and they're going to have natural. All the AI products will come out into next year. So if you think about today, about 50-60% of the AI products are out. Mid next year, all of them are out, and that's going to drive 10, 20, 30% price lift. And then on the internet side, we like Amazon. AWS is getting their mojo back. Cost discipline on logistics, and their advertising business is doing phenomenally well. So we think, this year we predicted Meta as our top pick. Our team's proud of that pick, given the outperformance of Meta. And I think we've all collectively said, it probably shifts from Meta back to Amazon. So Amazon, Meta, and Google and internet in that order would be kind of the top three.
I don't know. Meta's only up 178% this year, Brent. I don't know if you should take your victory lap just yet.
We failed.
Not too bad. And the next time you're in New York, we expect you to be sitting on set here with us, Brent. Thanks so much for joining us, making time for us.
Thanks for having us.
Appreciate it.